I really don't understand how this fact over here gets completely ignored by crypto media. It should be front, left, right and center of every single article. Ethereum is getting bought massively by Wall Street. And those purchases have a huge ripple effect. And everybody is just talking about the ripples, not about the source. In the last 14 days, if those last 14 days are representative of the purchases going forward, then almost 22% of the entire Ethereum supply gets bought up by Wall Street within just a single year. Compare this with Bitcoin. Over here, it's only 3.6%. And everybody gets so confused. Everybody thinks it's altcoin season. The altcoins suddenly get bought up by retail. But really, that is not what's going on. And here is why. Altcoin prices are massively connected with the Ethereum price. Just have a look at the most trending altcoins on the Ethereum chain, but it's the same for the all layer 2s, right? It's the same for Base, it's the same for Polygon, for Arbitrum, etc. All those altcoins, they're connected with wrapped Ethereum. So the pricing of an altcoin does not happen in US dollars actually. It happens via the ratio to wrapped Ethereum. So let's say Ethereum goes up by 10%, then automatically, without a single trade having happened, all those altcoins go up 10% as well in US dollars. And so really everybody thinks that it's now the altcoins that are rallying. What we've got here is the others market cap. So the market cap of all the altcoins that are not in the top 10. And yes, they are going up, but they're all just going up because of Ethereum. Ethereum is rallying more. Just have a look at how similar those charts look. When Ethereum is going up, the altcoins go up as well. When Ethereum is going down, the altcoins go down as well. The correlation coefficient, this line here in white, tends to be between +1 and sometimes occasionally 0, but in general, the two assets tend to move in the same direction at the same time. When Ethereum is going up, the altcoins go up. When Ethereum is going down, the altcoins go down. This correlation is much stronger with the altcoins to Ethereum than with the altcoins to Bitcoin. And so automatically, when Ethereum gets bought up by Wall Street, the altcoins go up, even though the altcoins haven't been bought at all directly by Wall Street. It's just because of the direct binding in the liquidity pools. And so this chart here shows the actual truth. This shows how capital is flowing from Ethereum to the altcoins and from the altcoins to Ethereum. What's actually driving the current rally? So we're now looking at the swapping activity, right? What actually happens here in those liquidity pools? And that's showing here. Ethereum outperformed the altcoins massively because, again, Ethereum is getting bought by Wall Street, not the altcoins. This is not an expression of direct purchases. It's just an expression of Ethereum going well. Since the middle of April to today, Ethereum outperformed the altcoins by 77%. And so the big question is why? I don't think that Wall Street is necessarily that much more bullish on Ethereum compared to Bitcoin. But Ethereum is just much smaller in market cap. And there are a lot of positive stories around Ethereum, right? All the stablecoins pretty much get issued directly on Ethereum. The bridge from fiat to crypto happens on Ethereum. Now we also have the idea that stocks will get directly traded on the chain. And of course, this will mainly be on Ethereum. Ethereum is the chain of institutions. Solana is the chain of retail speculation. And so Bitcoin's market cap is roughly 5 times larger than Ethereum's market cap. So if the same kind of capital flows into Ethereum as in Bitcoin, we see 5 times the projected supply absorption on the Ethereum ETF. And that of course pushes up the Ethereum price much more. And so the nature of the crypto market has completely changed in the last 1.5 years. Retail has exited, or at least retail hasn't yet come back, and Wall Street is buying up everything. And they're just buying, they are not selling. This is the number of Bitcoin that's held by the Bitcoin treasury companies plus the ETFs. Just have a look at this. This is accelerating over time. This is the number of BTC that's held. It's not the US dollar value. So the Bitcoin price has 3x'd in the last 1.5 years, but the number of Bitcoin that gets purchased tends to even accelerate now. So the demand by Wall Street is growing faster even than the Bitcoin price is. And since beginning of this chart, right, 5.5 years ago, we also tend to see how this rather accelerates over time, despite the price of BTC having 15x'd roughly during that time span. The average retail investor is not interested in this rally whatsoever. In the early days, retail bought and was hoping for the ETF that then Wall Street buys the bags. Now it seems like Wall Street is accumulating that much that prices rally to a degree that then at those higher prices retail might come back. So it could actually now be the case that BlackRock ends up dumping on the small retail investor right now. So what could end up happening is that BlackRock ends up dumping on the retail investor. Just have a look at the number of search queries for Bitcoin over time. It tends to rather be on the lower end now, despite Bitcoin being so high. Have a look at the number of monthly views on YouTube. This is now for the channel Altcoin Daily. It does not have any high levels whatsoever. It's at 2.3 million and it used to be above 7 million views. Here is Coin Bureau, also very far away from its prior heights. It used to be at 6 million, now it's at 1.8. Here is Crypto Banter, same thing. Retail is not really interested in crypto right now. Wall Street is moving the prices. Wall Street is pushing up Bitcoin and now it's pushing up Ethereum even much more. This is not an altcoin rally. This is an Ethereum rally. And Ethereum, as per ripple effect, just pushes up some altcoins with it. And I do not understand why not more people are talking about this. It's such a fundamental shift. Most people still talk about the 100x altcoin. This is not going to happen anytime soon. It only happens once new retail investors enter. This time retail might be late. This time retail might only get interested once Bitcoin hits 200k, 300k, when maybe Ethereum hits new all-time highs. Maybe at that point retail comes back, because that's then always when we hear from the random relative, should I buy Bitcoin, right? It's never when Bitcoin is low, it's never when Ethereum is low that those random people ask whether or not it makes sense to buy crypto. It's always after the rally, right? It's always after we have gone up. This then in turn means that when you're currently still watching crypto YouTube, that you're part of the minority. If you are buying right now together with the smart money on Wall Street, you're probably ahead of 99% of other people. We always want to be contrarian in the market, right? Because it's only a minority that wins long term and the vast majority tends to lose. So if we do the same thing as everybody else, we're likely going to be among the losers. If we now still follow crypto YouTube while the majority of people rather exits, that's probably a positive sign. Now there's the approach to simply just buy into Bitcoin long term, right? To buy, say, once a month to dollar cost average in, say $1,000 every month. And that is a winning strategy because there is a lot of volatility, and the more volatile an asset is, the better it is suited for regular purchases. And had I done this, I would have gotten this light gray return. Instead, I outperformed just dollar cost averaging into Bitcoin. I got this black line in return. The Bitcoin maximalists say that we should forget about all of the altcoins and that Bitcoin outperforms the altcoins most of the time. Everything goes down against Bitcoin long term. So in the end, just stick with Bitcoin. That's what the maximalists say. But I think it's better to actually take advantage of this market asymmetry. Because while the Bitcoin maxis are right that most altcoins underperform Bitcoin most of the time, and that trying to find the next 10 or 100x meme coin is a losing battle long term, while this is true, we can still take advantage of that underperformance. The altcoins tend to do so poorly because of supply expansion. So users of the platform of the altcoin, or maybe the early investors in the token, or maybe the team, they get token unlocks. They get more and more tokens available over time, and they might dump those tokens on the market, depressing the price. For example, here, this is the circulating supply of the Balancer token. It's a very typical DeFi token. We see this typically across the entire altcoin market. And if the supply grows faster than the demand, of course the price has to come down, at least relatively speaking. And so this is then the Balancer price relative to Ethereum. It just goes down all the time. And we can flip this. We can take advantage of this. If we go long Ethereum and short Balancer, or if we take out a loan in Balancer, swap this into Ethereum, we get this return here. And that's how I made this outperformance over buying and holding Bitcoin. I shorted poor altcoins and went long Bitcoin, Ethereum, and Solana. And in this video, I actually want to share this for free over here. How can we get this kind of return? How did I achieve this kind of return in the past? There are several approaches, and I'm sharing now the one that I'm using for several years already. Go to the platform Aave. So that's aave.com and open the app. Over here, you can borrow several tokens. So you're providing some kind of collateral. It's a borrowing and lending platform. You provide collateral and then you can borrow against that collateral. And what you want to borrow is the balancer token, right? That's a token that tends to go down versus Ethereum all the time. Thus, if we borrow balancer, if you've got a loan in balancer, and we then swap that balancer versus Ethereum, and then we wait for balancer to continue to go down versus Ethereum, we suddenly have profit, right? Our loan, our debt is going down in value. Our asset is going up, relatively speaking. And then once we want to lock in our profit, we just pay back the loan with the appreciated asset. It doesn't cost much at all to borrow balancer. It's 0.31% per annum. Yet the price is going down so consistently. I made tutorial videos to the premium members about this strategy in detail in the past. And again, it was a very nice moneymaker. This is why people stay subscribed to premium, because the membership basically pays for itself if you've got some capital. But I found an approach that's even better, and that's currently my focus. I started this out 2.5 months ago. It's again relative valuation bets, but it's not with borrowing and lending platforms. It's instead with perpetual futures. I started with 40K, and then after 2.5 months, this turned into 60K, so 50% return. I don't expect that the growth rate will be that strong going forward, but still, I do think that in general, this is a winning strategy, right? Simply because the insiders, etc., they cash out over time, long term, and depress the price. The problem with perpetual futures is that we need to be very diligent around our risk management. We have to use very tight stop losses, and we then have to adjust those stop losses regularly. We have to find the asset that's most deflationary, that might have seen a short squeeze, etc. And while I'm sharing all the trades that I personally do, many people don't have the time to copy trade. And so I got asked regularly by the members, can't you just provide some kind of liquidity pool? We provide money to that pool and then you trade for us. And I finally started this just 2 days ago. It does not use Aave. It does not use borrowing and lending platforms. Instead, it uses Hyperliquid. And this is a tutorial video on how to use the Bitcoin strategy copy trading vault on Hyperliquid. So that's this platform over here. The platform is growing massively. So in less than a year, it attracted almost 2 billion worth of value. And I've created a vault, so a capital pool where the annual members of Bitcoin strategy can deposit to and then simply get the same kinds of return. If you're just starting out and you've got some time and you don't have that much capital yet, then you can do this all manually, right? You can just go through the tutorials, you can watch them and then learn how to do this all yourself. I am sharing my own trades as well, and there are plenty of people that do this very successfully in the community. So if your crypto portfolio isn't yet $5,000 or $10,000, it's below that, then it makes sense to just go with the monthly membership and do the trading yourself. But if you don't have time, if you've maybe got a business to run and you've got way larger amounts to deal with, you don't want to hassle with all the risk management, etc., then the annual membership is for you. Because for the annual membership, where by the way, you're also saving a bit of money, you get access to the copy trading vault as well, with all the instructions on how to actually deposit your funds. And while I cannot guarantee that we make another 50% in the next 2.5 months, I will do my best to achieve positive returns. This strategy has outperformed buying and holding Bitcoin for more than 4 years now. And I don't see any reason why it shouldn't do the same using perpetual futures instead of borrowing and lending platforms that we used in the past. A link to Premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!